Palantir Technologies has become one of the most talked about companies in the world of artificial intelligence over the last 3 years. Many investors view it as a standout winner because it has consistently delivered advanced platforms that solve complex problems for its clients. Palantir has carved out a very unique niche in the artificial intelligence landscape, and this specialization has made its services incredibly difficult to replace. That stickiness has created a customer base that tends to stay loyal for the long term, which is an important quality for investors who value recurring revenue streams. When looking at the performance of Palantir, it is clear that the company has benefited greatly from the rising interest in artificial intelligence. Its growth trajectory has been impressive, and the company appears to have plenty of room to expand further in the years ahead. However, it is also important to recognize the other side of the story. The stock price has increased by nearly 2,000% in only 3 years, which has pushed its valuation to extremely high levels. Shares now trade at a price-to-sales ratio of 118 and a forward 1-year price-to-earnings ratio of 256. These figures are unusually high even for a fast-growing technology company, which is why investors must ask themselves whether the stock is still a wise purchase today. What makes Palantir particularly interesting is the fact that it does not compete head-on with the massive players that dominate artificial intelligence discussions, such as Nvidia and Amazon. Those companies drive the broad development of artificial intelligence on a global scale. In contrast, Palantir focuses on solving very specific problems for organizations that struggle with how to handle their massive amounts of data. This targeted approach is precisely why Palantir is considered so appealing. It provides solutions that directly address operational pain points, and because its systems are specialized and complex, there are very few competitors capable of replicating them. At its core, Palantir helps organizations use artificial intelligence to manage data more effectively. Instead of keeping information scattered across different systems, Palantir creates a unified platform that integrates all of it. This centralization allows businesses to uncover patterns, detect inefficiencies, and act on information much faster than traditional methods would allow. Managers no longer have to dedicate huge amounts of time and manpower to finding insights. Instead, they can rely on Palantir's artificial intelligence systems to bring clarity quickly, which can save both time and money. The company offers several platforms that are customized for different industries and types of organizations. Right now, its commercial operations in the United States have become the key driver of its business. In fact, this segment grew by 93% year over year in the second quarter, which demonstrates how rapidly Palantir is gaining traction with private companies. Revenue growth overall has been remarkable as well. The company reported $733 million in revenue during the second quarter, which was an increase of 68% compared to the same period last year. Government contracts remain a significant portion of the business too, and revenue from that segment grew by 53%. This balance between government and commercial business gives Palantir a diverse set of revenue streams. Another impressive aspect of Palantir's performance has been the enormous growth in contracts. In the second quarter, the company secured $2.27 billion worth of contract value, which represented a 140% increase compared to last year. Within this figure, Palantir closed 42 contracts valued at $10 million or more. On top of that, the number of customers grew by 43%. These statistics show that Palantir is not only deepening relationships with existing clients, but also successfully adding new ones. With each contract, the company further strengthens its role in reshaping how businesses manage data, automate processes, and accelerate workflows. One of the features that makes Palantir especially attractive to investors is the nature of its long-term agreements. These multi-year contracts create consistent revenue that the company can count on well into the future. During the second quarter alone, Palantir secured 157 contracts valued at $1 million or more. This consistent growth in both contract volume and customer count provides a foundation for long-term expansion. It also means that the company is locking in lucrative partnerships that will fuel its growth for years to come. In terms of profitability, Palantir has shown it can do more than just grow its top line. The company generated $567 million in free cash flow in the second quarter with a margin of 57%, which is impressive for a company still in the rapid growth phase. Operating income more than doubled during the same period, and margins expanded to 27%. This combination of high revenue growth and solid profitability makes Palantir stand out even more, because many companies in the artificial intelligence space are still focused solely on growth without delivering meaningful profits. That being said, the biggest concern for many investors is the stock's valuation. It is not unusual for technology stocks to be expensive when growth is strong, but Palantir's valuation is well above even typical high-growth companies. Some analysts believe this could set the stage for a correction, especially since many areas of the stock market currently appear stretched. Despite this risk, Palantir continues to rise, showing that investors are still willing to pay a significant premium for the company's unique technology and entrenched position in its niche market. Part of the reason investors are so confident is because Palantir has built what many call a moat around its business. Its proprietary algorithms and artificial intelligence platforms have been developed and refined over many years, which makes them extremely difficult to replicate. Furthermore, its long-term agreements with important clients such as the United States defense industry add another layer of security to its business model. These relationships not only bring in consistent revenue, but also reinforce Palantir's reputation as a trusted partner in sensitive and mission-critical environments. For investors trying to decide whether to buy Palantir stock now, the key question comes down to risk tolerance and investment horizon. If you are the type of investor who has a long-term outlook and can handle volatility, then Palantir could be worth considering. One way to approach it would be through a dollar-cost averaging strategy. This method allows you to invest gradually over time, buying shares at different price points instead of risking a large sum all at once. By doing so, you reduce the risk of investing only at a potential peak while still gaining exposure to the company's long-term potential. Overall, Palantir Technologies has become a leading player in artificial intelligence over the past 3 years, offering specialized platforms that unify data and help organizations act quickly. The company's commercial business in the United States surged by 93% in the second quarter, while total revenue rose 68% to $733 million, and government revenue climbed 53%. Contract value reached $2.27 billion, up 140% year over year, with 42 contracts worth at least $10 million, and customer count up 43%. Palantir also secured 157 new contracts valued at over $1 million, achieved $567 million in free cash flow with a 57% margin, and doubled operating income to a 27% margin. Despite its success and strong long-term contracts with clients such as the United States defense industry, the stock remains extremely expensive, trading at a price-to-sales ratio of 118 and a forward one-year price-to-earnings ratio of 256. For investors willing to take on risk with a long-term perspective, a dollar-cost averaging approach may be the smartest way to gain exposure. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.